Bismillahirrahmanirrahim. Dear viewers, in continuation of my previous vlogs about supply chain finance, today we are going to discuss this topic in brief but a constructive discussion, which is known as crash discussion on supply chain finance. Dear viewers, supply chain means three obligors or parties get involved into. Number one is vendor, which is known as supplier or spokes, and second one is anchor or large corporates, and third one is distributor or dealer. These three parties involved into supply chain, and the financial institution or banking system has introduced three facilities to these three obligors. The vendor finance is extended to the vendors or suppliers or spokes, and the payable finance is extended to the anchors or large corporates. And the third one facility is dealer finance or channel finance, which is extended to the dealers or distributors. So this is actually supply chain and supply chain finance. And when we talk about what is the function and purpose and scope actually of supply chain finance, I want to discuss with you viewers briefly. As you know, in every business, the supplier wants the payment immediately or instantly, but the vendor, the anchor or buyer or purchaser wants some time period to be extended for making the payments against the purchased goods. So the banking system, the financial institutions make sure to fulfill the desire of both ones, vendor and buyer. So the banks meet up the financial needs of both vendors and anchors. The payment is ensured to the vendor on behalf of the buyer. When the bills reach out to maturity, then the bills are liquidated. The time may be 90 days, 180 days. It depends upon the policies of the financial institutions or banks prevailing in the market. Dear viewers, briefly, let's discuss what is the actually exposure or limit size of the supply chain finance, a facility which is extended to these parties which I have discussed earlier in discussion and today vlog. Normally the 80% of trade bills or accepted bills is extended to these obligors, and the bank may decide, some bank make policies that minimum 0.5 million will be extended and maximum line would be 25 million. Number one. Number two, what would be the eligibility criteria? In eligibility criteria includes the vendor must have a 3 years experience in same nature of business. Number one. Number two, that vendor or that borrower must have a 2 years relationship with the buyer or anchor or large corporate. Number third, the buyer or anchor would provide a confirmation letter. Number fourth, the buyer will confirm the business volume of 1 year of the vendor. Number five, the buyer will provide an undertaking that the proceeds would be credited to non-checking account of the concerned bank where the vendor is maintaining the account upon the liquidation of the bill. So, dear viewers, these are the actual, you can say, the eligibility criteria which would be observed while extending these facilities to the people or organizations or parties involved into supply chain. And next one is collateral and security. Many people ask questions about, this is FAQ, frequently asked question, that what kind of securities or collaterals would be provided while the bank extends such type of fundings or facilities to these parties. This is very pertinent to mention here that there is no need of property. There is no need of the collaterals like industrial, agri, residential or commercial. We just need to provide the PGs, personal guarantees. Number two, PDCs, post-dated checks, which would include the principal and markup upon the markup would be calculated till the liquidation of the bill. And number third one would be the trade bills or accepted bills. Number fourth would be the charge over receivables or assignment of receivables or hypothecation of receivables, you can say. So these are the securities which would be provided. And next one is, many people ask about that, what would be the pricing? Pricing depends upon the bank's policies. Normally bank charge the 3 months SCIBOR plus 3% spread. And the last one which I would include, and I would like to conclude this vlog because this is going to be very long, documentation. Documentation includes purchase order, delivery challan, insurance policy including policy and PPR. Number third one is GRN, goods receipt note. Number fourth one is quality checking. So these are the main topics which I have discussed in this vlog. Normally general discussions, the ORR would be 4 and almost the tenor would be, the one bill tenor would be the 3 months or 90 days. The next bill facility will be extended upon the liquidation of the first trade bill or first accepted bill, and in case of non-payment, the first notice would be served within 30 days and the next notices would be served fortnightly till the full and final adjustment of the line. So, dear viewers, this is actually about supply chain finance and other things. And in next upcoming video, we will discuss about the blockchains, which will include the public blockchains, private blockchains, hybrid blockchains, and the consortium blockchains. And the next topic would be about the smart contracts, and the next would be the e-disbursements, and inshallah we will discuss in those videos. Thank you so much.